What's up, guys? Thanks for tuning into our channel. Today we're going to talk about interest-only loans. What is it about? Is it the right program for you? And what are the advantages and disadvantages to financing an interest-only loan? Before we dive into those details, let's talk a little bit about the requirements. So interest-only loans generally require a 20% down payment. Loan size needs to be above 647.2. These rates are generally lower than market rates, but they are on on an adjustable rate fixed for a certain amount of period. So it could be 5, 7, or 10 years that the mortgage rate's going to be locked in or fixed, and then after that period, it does have its adjusting period depending on which one you choose. So the importance of understanding what that interest loan program is going to offer and if it's the right thing for you is very important. So the advantages to having a program like this is it gives you the financial freedom in your monthly obligation. There's no principal in that payment, so your payment will be a lot less, substantially less than a principal and interest payment like a traditional mortgage. That should allow more flexibility for maybe future investments, maybe paying off some debt, or if you get paid bonuses at the end of the year, you can always use that towards a principal reduction. But you always have the opportunity to make principal reductions, but you're not obligated. So what happens is during that period, if you never made any principal reductions, that's basically going to be the balance where you started at the end of that time frame. Home appreciation and home values do well. You should see home values increase between 4 to 5% in the next year over year for that period of time. So you'll still get the investment of ownership, and it'll still be a better strategy than if you were to rent something and wind up paying more for your monthly obligation and never really reap the reward of the equity gains if you decided you had to rent instead. So interest only, it's a great option. You definitely want to understand what the strategy is going in to be sure that you're choosing the right program for you. Those are the advantages. Disadvantages, basically it's not going to be a fixed mortgage. You are obligated to pay your own principal if you decide to, and it's adjustable. So you want to make sure it's going to be a short-term own, or maybe you plan to turn it into a rental property. You can always refinance that later. So there's definitely some pluses and some minuses. Make sure you have a good conversation with your mortgage advisor to determine if it fits your goals. But interest-only loans, great way to leverage monthly debt and allow yourself to just build capital in that period of time. Guys, thanks for tuning in. Be sure to subscribe, like, and comment below. Love to hear what your questions are on this particular program and see if we can share some great advice on some of the experiences that we've had in the past on this interest-only program. Thanks again. Talk to you soon. Bye.